Hi, everyone, and welcome to the new Behind the Numbers show, Reimagining Retail, an e-marketer podcast made possible by Mountain. I'm your host, Insider Intelligence Principal Analyst, Suzy Davidkhanian. Today is Wednesday, February 16th, and you're listening to the bi-weekly retail show that will cover all things retail and how it collides with every part of our lives, not just as shoppers. I should mention that in the first 3 episodes of this show, I was joined by my co-host Andrew Lipsman. Going forward, Andrew and I will alternate hosting duties for most of the episodes. This will give us a chance to talk to some of the most interesting voices in retail and cover different parts of the retail ecosystem. Retailers and brands are laser focused on consumer behavior and how COVID has altered that, especially as it relates to brand loyalty. On today's episode, I'm so excited to welcome Steve Dennis. He doesn't need an introduction, best-selling author of Remarkable Retail, How to Win and Keep Customers in the Age of Disruption. Steve is a strategic advisor, speaker, and recognized by many organizations as one of the leading thought leaders in the retail industry. In the first half of the show, we'll be talking shop about other, sometimes overlooked impacts of COVID that aren't quite as sexy as customer loyalty, labor shortages, or supply chain disruption, but will for sure impact how retailers should be planning their business go forward. In the second half, Steve and I have some pop-up rankings where we'll discuss what we think are some of the brands that will really pop in 2022. Retail executives focus so heavily on market share rankings, but by doing so, they might miss out on the fast-growing brands that will start eating into the top 15's market share. Just think about Cheyenne. Welcome, Steve. So excited to have you. I still remember the first time I heard you on stage talking about the retail landscape. I think that must have been at least 10 years ago in Chicago. Those were definitely different days in retail.
Yeah, a few things have happened since then.
Just a few.
Yeah, but thanks for having me on.
Well, I'm so excited to get your perspective on all things COVID outside of customer loyalty. But before we get started, I'm going to start all of my episodes with this segment called Ratings and Reviews, where we'll get to discuss a good or maybe just a bad consumer experience that we recently had. What made it memorable, or what could the retailer have done to turn the experience around? So I'll start to give you a couple of minutes to think about your experience.
Okay.
I recently bought something on Amazon, regular Amazon. It was a face cream. It was one of those subscription models that I didn't realize I had. So it came automatically in the mail. I wasn't expecting it, so I was already surprised. So you could argue that that's good, but for me it was bad. I didn't need it. So I went to go return it at the Whole Foods and they wouldn't take it because there were labor shortages. And so they weren't ready to take the products into the store, which typically I would have said that makes for a very good customer experience, right? You go onto the app, you process the return, you get a QR code, you go to the Whole Foods. But for whatever reason, labor shortages are not only hitting stocking the shelves, they're also hitting the returns. So could have been great, but wasn't so great experience. What about you? What is one? I'm sure you have tons, but tell us one.
Well, one I'll mention that's positive really quickly is I have returned Amazon things to Kohl's a couple of times, and I found that to be a really, really easy experience, though it's the only time I've gone into Kohl's, I think, in the last 5 years. So that's maybe not good. The one that is very top of mind for me is I had bought something online from Crate & Barrel, and it was the wrong thing, completely wrong thing. And in order to get the right thing, apparently I had to process a return. And so I asked through chat, I guess it was, whether I could just return it to their store. And they said yes. So I go into the store with the box and I said, here, I'm to return it. And the woman looks at it and she's like, where did you get this? And I said, from Crate & Barrel. I was in a Crate & Barrel box, by the way. And she's like, no, this is not ours. And I said, it most certainly is. And she said, did you buy it online? And I said, yes. And she said, well, that's not us. And I was just, in this day and age where, as you may know, I don't particularly like the term omnichannel, but, where we've got this very blended world, to have that kind of reaction, even like that store associate would say it, just seemed incredible to me. And then it ended up being very cumbersome, the whole thing out.
To work through.
Yeah, that was pretty amazing.
They should know better. The customer is always right. This is not new, but now it's even more powerful.
Yeah.
Which I think that's a great example and takes us so well into our first segment of Talking Shop. Clearly, COVID did change the way retailers operate, and it shifted, I think, and I've heard so many people talk about this, It's shifted the power dynamics really away from the firms and the retailers to the consumer, and even larger to the community in general. So consumers are obviously more intentional now after COVID. I mean, it really has been a difficult 2 years. We know through some studies like Euromonitor that 28% of consumers have tried to purchase a locally sourced product in 2021, or that they're worried, according to EY, about product availability. And that is now even more important by 58% since the pandemic started. Consumers are just worried about it and are switching retailers potentially. Or even that same Ernst & Young study, around 53% of consumers said they're more likely to repair something than to replace it. So really, the consumer does have the power.
Sure.
And you take that one step further, and it was all over NRF Big Show. It was a whole track around the supply chain snafus and what the impacts are to the supply chain. But there are so many other impacts. So I thought today we could spend some time talking about it. One of the impacts I hadn't thought about when it comes to the supply chain is I heard the president of an off-price retailer talking about, while supply chain snafus are really not great for most retailers, in the off-price model, it's actually a big win. And all of a sudden there's all this inventory when the original retailers who were waiting to sell that product, it's no longer in season. It's a problem for them, right? And so now off-price has a chance to get this great inventory. That's one positive, if you will, impact of COVID. Are there other things that are going on in your mind? What have you noticed?
Well, I've actually got a whole section in my book about this, but I won't take you through that. I mean, I think a couple of things, some of which I do talk about in the book, some of which have, I guess, occurred to me since I finished writing it, which was over a year ago now. One is I think there's kind of this weird new appreciation for physical retail. You know, as much as there was this acceleration to e-commerce, which is actually more like 2 years, not 10, even though that's kind of the common thing.
I agree. Totally agree.
You know, it actually, I think, caused many retailers to appreciate the value of stores, because it used to be that online and physical retail were sort of very separate. And now, you know, obviously they're coming closer together. But the fact that so many retailers offered curbside pickup, offered more buy online, pickup in store, were fulfilling orders, whether that was through local home delivery or through the mail, utilizing their stores, I think has really caused kind of a new interest. It's also turned out that we've learned, despite this great acceleration to online, that e-commerce for most people is still very unprofitable. And one of the ways that both legacy brands as well as these digitally native vertical brands are trying to become more profitable is to actually use their stores more. So, I mean, I've been sort of on this for like 7 or 8 years, so I don't think this is a totally new phenomenon.
Right.
But I think the awareness has been greatly raised. The other thing I think that's kind of related is what I call the hybridization of retail, which is, you know, again, you kind of had stores for the most part built for one purpose, which is a place for people to go look at stuff, make a selection, maybe get a little bit of sales help, pick it out, pay for it, and take it home. And then, you know, you had mail order catalog and then e-commerce, which kind of had its whole separate fulfillment channel. Now you've got just this changing role of the stores to do many more things. You've got these supply chains now overlapping and being blended, and dark stores, dedicated facilities for sorting. I mean, it's really caused sort of an interesting degree of rethinking, I guess, about many business models. And I think actually that's going to accelerate even more.
You're right. I mean, McKinsey had a study in 2021 that 44% of stores served as partial or entire fulfillment centers, and that was expected to jump to 50. So over half, 1 in 2 stores is expected to serve as some sort of fulfillment center in 2022. And I mean, one of the things we talk a lot about, and coming from industry, it's like everyone kept talking about how the store is dead. And yes, there were many years where more stores were closing than opening. But I think 2022 seems to be the year where we're going to see a lot of stores opening. I did a little bit of research, and it looks like the majority of store openings are going to be in that off-price sort of mass channel. Like TJX is going to open 170 stores, or is planning, I should say, to open 170 stores. Ross, 110 stores. Big Lots, 50 stores. I mean, the list goes on of store openings. And so that's kind of exciting too, right? Retailers are looking for a way to lure consumers back to stores by reinventing them. And clearly there's hope if people are opening stores.
Well, you know, I made a little bit of a name for myself 4 or 5 years ago when I said physical retail isn't dead, boring retail is dead. Retail apocalypse idea has always been just absolute baloney. There's clearly a part of retail which is moving on sort of a pure online basis. And in general, because of digital shopping, you need less shopping. But store closings were caused over the few years because they actually spiked prior to the pandemic. Mm-hmm. They were caused, number one, by overbuilding, a massive misalignment between retail space and consumer demand. And at some point, that needed to get corrected. But the other thing that happened is these retailers that are in the middle, and the moderate department store space is just the greatest example. In a digital world, their reason for existing, which was powerful 30 years ago, just continues to be less. Americans have been spending less on apparel for 20 years. And so if you actually look at the store closings, almost all of them, except for a few retailers that got in trouble because of bad financing decisions, like my old employer, Neiman Marcus, almost all the closings are in moderate apparel and these retailers that are not either on the value equation or on the more premium, high-end, call it experiential. So To me, that's been, you can go back and see some of the stuff I wrote 7 or 8 years ago. It's been totally predictable we were going to go in this direction. COVID accelerated, in some ways, some of those trends, but it actually kept some retailers that probably should have closed more stores and gone out of business alive, because with federal stimulus and more discretionary income, people were able to spend in places and are starting to spend in places like Macy's and Penny's more than they were a year ago. But when the dust clears...
Yeah, the cash inlay.
Yeah, but when the dust clears on that, the problems of those stores are not going to go away. They have to really change to be around.
Right. And I think that brings us to an interesting new point in terms of once retailers just sold things. And now, especially after the pandemic, we know that that's not feasible anymore. And so they need to think through how to mitigate risk by having different revenue models. So we're seeing a lot of the retail media networks popping up. Ancillary categories like Walmart now sells pet insurance. I think there's going to be this need for retailers to rethink their business model in general. So not just stores and online and being live streaming and voice commerce and car commerce, but just in general, where else can they make money so that they do stay alive and not rely on government stimulus?
Sure. Yeah, I think 2 ideas there quickly. One is, and I didn't come up with this, but I think there's a real distinction between what I call buying and shopping. Buying is more getting something off your to-do list. It tends to be a pretty straightforward, unemotional sort of path. The internet's great at that. Retailers like Walmart and Target are great at that. When we're in shopping mode, we're looking for a broader solution or something that we're more emotionally connected to. So I think it's very important for retailers to really pick a lane to understand where their opportunities are, because I'm not looking for an experience when I'm just buying some batteries on Amazon, right? But I am looking for something different. And generally speaking, physical retail does better on the shopping side versus the buying side. But the other thing that I'm starting to talk about, particularly in my keynotes, is what I'm calling the great reconfiguration, which is this need for most retailers, to your point, to really rethink what their business model is about. Because in general, particularly on the shopping side, this one size fits all kind of simple format, channel, product-centric thinking is really pretty limiting. It's so much easier now for customers to either unbundle pieces of what they bought without having to make that part of a traditional retail experience. But it's also easier for retailers to add some of these services or different component pieces, or change the way they go to market in a given city, like Nike has been doing. So I think there's a lot of change. And the main lesson is most retailers that aren't winning, and even some that are, they have to change their business model probably much more profoundly than they think right now. And they got to move a lot more quickly.
Right. Nimble, understanding who your consumer is. And I think the last thought I would say on this, because we're hearing a little bit about this mass exodus to the suburbs. And I think from a retail perspective, it's if you aren't keeping track of what's happening around you, then you're going to miss out on opportunities, really, right? Understanding where the new suburban luxury hubs are, for example, is critical. Understanding who your consumer is and what they're looking for and what they're expecting from you at different parts of the shopping journey, critical. I feel like we can talk about this forever and ever, but we're going to move on to our next segment. Before we do, let's get a quick word from our sponsor, Mountain, and then we'll get right back to it.
The rise in connected TV viewership has given advertisers a new way to drive incremental reach and revenue. But they need the right marketing software solution to truly make the most of this opportunity. That's where Performance TV comes in. Mountain's connected TV software platform allows advertisers across every industry to drive more visits, conversions, and revenue, all from a single intuitive solution. that's optimized to deliver performance. Visit mountain.com to get started today.
Okay, time for the second half of the show. And here we've got some pop-up rankings. We're going to share with you brands or retailers we've been keeping an eye on in terms of high growth potential in 2022. So for our rankings, let's look at 3 brands or retailers that are going to hit a tipping point in 2022, Steve. We know that retailers obviously keep track of companies that are huge, like Amazon or even Apple. But what about the ones with explosive growth, the ones that just pop out seemingly out of nowhere? Placer AI published the top 10 retail brands to watch in 2022 report. And it includes, which I was kind of surprised because they're definitely not stand out in terms of newness, but it included Warby Parker or Allbirds. Also, it included other companies that are not new, but that were not actually on my radar, which I thought was interesting. Blink Fitness. This idea around low-cost fitness concept might start to pop even more. And then I would say probably not just in fitness and everything else, akin to what we were just talking about, understanding that value proposition. And in fitness, especially if you have to close your store, open it again, close your store, open it again, people don't want to spend $300 a month. But I was surprised to also see Burlington on their top 10 retail brands to watch. I am very interested to hear what are some of the brands that you're keeping an eye on, Steve.
Well, there's a lot. I'm going to maybe skirt the question a little bit. I do think that I'm watching many of these fast growth, digitally native vertical brands. So that would include Warby Parker and Allbirds, but it also includes Vuori, which I think is a really interesting brand.
Wait, I don't know Vuori. Tell us more.
So Vuori, and we actually just had Joe Kudla, their CEO and founder, on the Remarkable Retail podcast. Vuori just got a valuation of $4 billion. So they're certainly not tiny, wow. But they are an athleisure brand, started focused on the men's category, branched out, and kind of have this sort of Southern California, easy living kind of aesthetic. So they've been growing quite quickly online. They now have, I want to say about 15 or 20 stores all on the West Coast.
Oh, wow.
But they are opening in Boston and I suspect a bunch of other cities in the next year. And it's interesting. Obviously, they've gotten a great valuation. They've got a different angle on athleisure. So whether they will really be able to break out to that next level from sort of that West Coast orientation to really be someone that can challenge Lululemon and some of the other brands will be interesting.
Well, that's interesting because there aren't a lot of men first athleisure brands, right? Sadly, potentially an afterthought in a lot of these brands. And Nike certainly does have a lot of men's wear, but it's not necessarily billed as an athleisure brand. So it'll be interesting to see where they land.
Yeah, I really like them. But I think in general, I would say these brands that have received quite a lot of funding, that have gotten to a certain scale, I think just in some respects, this next year is going to be sort of a reckoning, because many of them have hit the wall on growth because they've found their total addressable market's not as big. Many of them are now getting very aggressively into store openings like we were talking about before. They find that they need that to reduce returns, to lower cost of acquisition. And I think very different dynamics going on to move into physical retail in a big way. And as you probably know, virtually none of them are making any money. And so I think just kind of watching that whole, there's probably a couple dozen of them that are either public or about to go public or will need to raise a lot of capital to keep going. So as a category, I'm really watching that. These aren't small brands, but I think RH, Restoration Hardware, and Nike continue to be really interesting brands. RH from the standpoint of continuing to invest heavily in physical retail with, frankly, not such a good digital component, but they are expanding and doing really, really well. But is that the sort of brand that's got much growth left in it, particularly after such a shift in spending to the home category? That'll be interesting to watch. And I picked Nike. It gets back to what I was saying kind of about the hybridization and the need for reconfiguration. Nike's made this big push in their direct-to-consumer business, but they're also really doing an interesting mix of how they balance wholesale with retail, the various formats that they're rolling out, taking really a more of a portfolio approach to get closer to the customer or go after certain areas. And then the last one I'll mention, I guess I violated the rule of three, and also a big company. But I think what Amazon is doing in physical retail continues to be interesting to watch. Amazon Fresh, certainly, as their big push into grocery. Be fascinating to see what they do with that. They've got this Amazon Style store, which I think is one of the great oxymoron names for a store, but their push into apparel, They're doing these suburban Amazon Go stores, partnerships with Starbucks. So just a lot of activity.
Yeah. So Steve, I think I'm going to press you. I'm going to give you my thoughts on this, and then I'm going to circle back with you and see if maybe that's your answer. I think in my former world, we kept track of some of those Instagram type of brands, like at the time Fashion Nova or Cheyenne. I don't know if that's how you say it, but Shein, where they just sort of come out of the blue. You know, all the brands you named are huge, except for this athleisure, are ones that have been on our radar for a while. They're definitely poised for growth. And I see exactly what you're saying in terms of poised for growth in 2022. They're doing new things. They're listening to their consumers. They're trying to figure out using data. One of our podcasts, actually, we talked about some of the trends that nobody's talking about for 2022. And one of them was, you know, it's no longer about getting new customers. It's about retaining existing customers, because it is so expensive, like we saw with the Warby Parker IPO, to get a customer to come to you. If you lose them after you got them that first year, kind of useless, right? So I totally hear what you're saying, but there must be some smaller unknown name brands that you are keeping sort of an eye on that we could give our listeners a little heads up on. So I picked Pop Shelf. Started in 2020, at the end of 2020. I think it's fascinating because it's the Dollar General's new format. It's coming from a place that has a lot of money and they can afford to iterate, try again, do new things, keep moving the needle. It's billed as fun, affordable treasure hunt. So when I looked at the pictures, it kind of looked like a TJ Maxx or a HomeSense. And it's a lot of categories, all under $5 that Dollar General is not in right now. And they're even calling it guilt-free shopping and talking a lot about joy and color and unexpected delights, which we know these are all words. When we did research on off-price back in the day, these are all words that are what consumers talk about when they're talking about that off-price experience of like delighting and being surprised and feeling like you got a good deal and that you got merchandise that you weren't expecting and it makes you so happy. And so what I find fascinating about this is it's very small. It started as a store within store. They did some research, they figured it out, and now they're supposedly opening 200 stores this year. And they're hoping by 2025 have 1,000 stores. So maybe not on anybody's radar today, but I think every department store and every off-price and every mass retailer should probably be keeping an eye on them because they're definitely doing something new.
I think it's a little premature, though they're supported by a big company, to believe they have the analytics to be talking about opening 1,000 stores. But I think that's interesting. The off-price value categories become so big that I think there are many ways to cut it. There's Five Below, there's Ollie's Bargain Bin. I mean, these are brands that don't get a lot of attention, but are growing pretty quickly. One brand I'll throw out there, which I think is interesting, is called The Citizenry, which is actually based here in Dallas, where I am. They are a home furnishings player, more kind of in home accessories. But what's really interesting about their model is they really work on these collections with local artisans around the world. So there's a very big sustainability, ethical sourcing play here. Product, I think, is very good, but their niche is really to kind of go after certain style categories with this strong sustainability, fair trade kind of angle. I guess it's about a year ago now, but COVID sort of affected this. They've opened their first physical store in Lower Manhattan, and they raised, I think, $20 million last year. Wow. So we'll see where they go with that. One of the reasons why I don't see that many concepts that I think it's clear how quickly they can grow, because, you know, there's lots of examples of stores that work in a few places that seem sort of interesting, but really have a hard time getting to that kind of escape velocity. Now, your point about some of these influencer brands, you know, that can kind of come out of nowhere, it seems, and develop this following, and then suddenly you can sort of pile on behind it with product. I haven't yet figured out a good way of sort of separating the ones that are for real. I mean, if your name is Kardashian, I guess that helps, right? But
it's true. This is true.
But for people that have been anonymous 6 months ago and suddenly have a big following, which of those are really going to break through and have any staying power? I'm not smart enough to figure that out.
Definitely it's not that. I just think it's a crapshoot in some ways. But I also think from a retailer perspective, it's not so much about having one of these brands on your radar. It's about understanding that if you think about your competition as just Target, Walmart, Amazon, you're going to lose, because there are other folks collectively coming together that will start to eat at your market share. And if you start to realize that, then it's too late. So how do you make sure that you think about your competition in a much broader way than the top 15?
I've been closing my keynotes recently, or the last part of my keynotes, with a quote from a guy named William Gibson, who some listeners might know, who said, "The future is already here. It's not just very evenly distributed." And what I take away from that is that what's going to affect your business probably exists somewhere else in the world right now. So it might exist among your competition. It might exist in a different retail category. It might exist in a totally different kind of business. You need to really be out there studying consumers, studying the competition, but studying some of these broader trends and trying to figure out which of these changes or which of these innovations might eventually make it to be relevant for you. And then, aside from just that studying, you need to be testing and experimenting with different things.
Absolutely. What a great way to end. Think about best in class in adjacent industries, not just in retail, as you're thinking about innovating and iterating and talking to your consumer. I mean, again, bias because I come from consumer insights, but understanding what the consumer is looking for is so much better to drive your business than imagining what you want to do for your consumer. Maybe they won't need it. Maybe they will. I mean, there's always that Apple example, but I feel like that came from a place of research, even though that's not how we really talk about their story.
If I could just add one thing on that, there's this famous quote by Henry Ford, who I sort of hate to quote because he doesn't have a great history. But, he said, if I'd asked consumers what they want, they would have said a faster horse. And I think that there is absolutely this sort of incremental gap analysis sort of thing, which I think is at the heart of traditional consumer insight. But there's also this just observing, I think, of where change is happening, maybe in a way that customers aren't looking for, but someone else has figured out. Quick example, when Nike started with their consumer direct offensive, and I worked just a little bit with them a bunch of years ago, one of the things they did is they took their team around the world to look at consumer-focused innovation in a lot of different places. And yes, they spent some time with some of these newer brands that were hot and upcoming and, had just one store in Soho or San Francisco or something. But they looked at innovation in a lot of different categories because something you might experience, say, in a hotel world or the restaurant world or gaming or something, could turn out to be very important. So I think it's that intersection of really good sort of traditionally rooted customer insight, but it's also seeing, what are people discovering that consumers maybe didn't know they wanted, but when they see it, they're like, wow, I like this. And if I like this here, why can't I have that same thing in my retail experience?
No, you're absolutely right. Sometimes retailers have to lead consumers. And I just think about the most basic example, which is QR codes. 5 years ago, we were talking about them, but nobody was using them. 2 years ago, when the pandemic hit and we had to use them for restaurants, it was the worst experience ever. I did a speaking engagement and I was like, QR codes will definitely go away as soon as the pandemic is over and people are comfortable touching things. They haven't. They're bigger and better than ever, right? And so we know in research that what consumers say sometimes they still need to experience before they can make a definitive yes, no.
Sure.
So that's the end of today's show. Thank you, Steve, for joining me for my first solo episode.
Well, thank you for having me. It was a real pleasure.
And thanks to everyone who tuned in. We'll be back in a few weeks on March 2nd with another episode of Reimagining Retail. Don't forget to check out tomorrow's episode of the Behind the Numbers Daily, an e-marketer podcast made possible by Mountain.